Chief Market Strategist at BullseyeOption.com. Welcome to the show, Alan.
Good morning, Tom. Everything bull market. We're bouncing back after coming back down to that breakout. So my hat's back on.
Well, it should be. I mean, you know, the optimism's there. We had that 2% pullback in the S&P 500 last week, little blip on the radar, and it's kind of reflective, Alan, that, hey, any kind of dip that we're going to see or, you know, maybe 2-3 days down in a row is going to get snapped up pretty quickly at this point, right?
Yeah, and we could see we had a blow-off top, and we actually had where we had a new high on a weekly basis and a lower close a week ago. So that was kind of cautionary, but the market's been able to shake it off. And, you know, you can see here we're making another move. Everything has remained strong. Now we've got, you know, 6 weeks. I mean, how much longer? You know, until after January is when earnings start again. So we're pretty much done with that as far as a fundamental catalyst. So it's really become a stock pickers market, not a macro market like it used to be. You really got to be the stock picker. And that's where the discipline comes in.
Yeah, I mean, we've seen that in different sectors within the market at this point. You take a look at Walmart versus Target, some of the chip names versus NVIDIA. We've seen some divergences there, so that's a good point. You got to start being a stock picker when we've got stretched valuations at this point. But Alan, you know, real quick here, when you look at the potential catalyst that could create headwinds, we've got those geopolitical tensions starting to rise at this point. But at the same time, we're going into Thanksgiving holiday. There's not a lot on the calendar as far as earnings goes and data. So that maybe provides a little bit of lift here for equities, correct?
Yeah, more momentum. You can't fight the momentum. And yeah, we've always had this geopolitical risk in the last couple of years, and it really hasn't amounted to anything. And where it hasn't amounted to anything is you and I are old school. It hasn't impacted the crude market at all. Now, today we're getting a little bit of a bump, and we've been between 65 and 75 for a while, and now we're above the 70 pivot level. But what's amazing is you can see a number of these wedges on the charts where we have a series of lower, of higher lows and lower highs, and it's breaking out to the upside. Now, it's disappointed me like 4 times in a row over the last year, so I'm not saying this is the time, but if you look at Schlumberger, Halliburton, Oxy, they all have these great bottom bases with bullish divergence. So I think the risk reward is definitely on their side. But, you know, I've been burned twice, 3 times by crude so far this year. So I'm not ready to say it's ready until it's ready.
Yeah, that's another thing. You make a great point there. Geopolitical tensions, while they might affect crude oil for a day or two, you know, you've got to start looking at demand that's kind of waning a little bit, and then also production at record levels at this point. So we'll continue to watch that story. But I wanted to flip it over to gold because we've seen a resurgence this week in gold. It hit that 100-day moving average around 25.75, and it's been off to the races this week, even though the dollar's relatively firm. Alan, can we take away that, you know, inverse correlation here and just kind of throw it in the garbage because gold's rallying?
Yeah, it's a bull market. It's a bull market in gold. It had a 10% pullback. It was almost exactly 10%. And so, you know, you're seeing now the buyers come back into play here. The dollar is steadied around the 106. And if you look at the 2-year, that's kind of the top end of the range in the dollar. So that's part of the component. But if you get a full V recovery on gold, and we're at the halfway pivot right now of that drop from the top, 26.75, we get back above that, then we can attack the top again. And then a V recovery, the distance that drop on that old top targets more than 3,000. So it's go gold is not gone. And it was important. We talked, you and I, in the office just a couple weeks ago about how we fluctuated below that moving average and came right back above it. So it's back on the positives again. And looking at that, I love Barrick Gold, which is GOLD, sorry, is actually their symbol. And they've got a better risk reward than the metal itself. They've got leverage, long accumulation, and there's some gaps up above that need to be filled. And that's really got a lot of potential here. A full V recovery on that, you know, to 21 is gonna get a big payoff.
Yep.
Those in the money options that I trade.
Yeah, that was trading $21 a share, over $21 a share, just at the end of October. We've seen that same kind of price action in Newmont Mining, which has been slammed over the last several weeks as gold kind of pulled back. But yeah, maybe that's the opportunity here in some of these gold miners. Now, Alan, give me your take here on Bitcoin, because we've talked about this. 100 grand was like a tractor beam, and we're almost there.
Oh yeah, it's got to get there.
I expect us to hit there at least before the end of the week, if not before the end of the day today, Alan. But you can't stop this momentum in Bitcoin, right?
No, not at all. And the most important part I'll talk about in a second is the legitimacy now of that market. But looking at the price action, again, the action I see, the potential I see is in the miners. We took big profits in Mara, Riot, and CleanSpark after that big breakout, but it came back down to the breakout and reset itself. If you look at the chart in Riot, it came right back down. It had a huge bounce, but then, you have to take your gains when you have them, and that's why I follow my rules, my money management rules. And if you ever get 100, when you get 100%, you got to take at least half your positions off. And be happy with that. If you're going for more than that, that's a different ball game, and you can peel off positions. But that was a great move in a period of just a couple of days. But it's come back, giving everybody a second chance. Look at Riot right now. Now today it's rallying, starting to play catch up to Mara and CleanSpeak. But I think the miners are where it's at. They've got a lot more upside than Bitcoin itself. Now Bitcoin's going to continue to run, but it's talk about the legitimacy. I was never an early adopter in Bitcoin because I'm an exchange traded product guy. I like to know my counterparty risk is eliminated, and there used to not be a consolidated tape when it came to Bitcoin. So I missed out on all the money. But that's just being an old guy. Yeah. Now there's Bitcoin ETFs, there's Bitcoin futures, there's Bitcoin futures options, and now there's Bitcoin ETF options. So it's closed the circle. So what that means is the volatility has gotten less and less and less, because now everybody can hedge their price risk properly and efficiently. And now, it's silly to say, but now it's a real market.
Yep, and legitimacy coming from potentially the administration. Also, they might have a post coming for cryptocurrencies. IBIT ETF at record highs. MicroStrategy popping over double-digit percentage points today, along with Riot and Mara Holdings.
The risk-rewards on the miners, if you look at the charts, the risk-reward potentials on the miners, just like for whatever reason, in the same thing in the miners and gold, the miners and gold haven't kept pace. They've done so, but at some point there's going to be a little turn and maybe a rubber band snapback in those.
Yep, we'll continue to watch that story. See if we hit 100 grand before the end of the week.
When we hit 100 grand.
Yes, I agree with you there, Alan. All right, great discussion. That's Alan Nuckman, Chief Market Strategist at BullseyeOption.com, joining us. But coming up after the break, Rick Ducati, he's going to join us to cover charts.